This video is for educational purposes only. This video is not a recommendation to buy or sell a security. This should not be considered investment advice. It is important to do your own research before making any investments. Hey everyone, hope everything's going well. My name is Bobby. I'm here with Steve. This is our weekly meeting. We go through a bunch of stocks and cancel stuff for the week. So welcome to our meeting.
Welcome to the weekly routine meeting.
Yes. All right. And as always,
Beats is trash.
Beats is trash. More to come on that further. All right. So to start things off, we just like to go through our trading commandments, just things that we want to kind of remember every single week. So the first and foremost, discipline equals freedom. Got that from our good man Jocko. Pretty much what that's just saying is having discipline, doing the right things, putting in the work every day. That is going to bring you where you want to be in life and eventually going to get you some freedom. So
particularly financial freedom.
Absolutely. Don't fight the market. I think that is something that is going to be throughout all of these videos. We are following what the market tells us. We're not bringing our egos, not bringing our opinions into these things. The market will tell us what to do. Don't fight it. Cut your losses. If you are a cancel investor, you know this is first and foremost one of the most important things to learn right away. Do not let those losses run. That will completely kill you.
Before we move on to the next one, we'll probably be discussing that ad nauseum, and you'll probably be thinking that we are the worst investors in the world because we'll be overstressing this, but that's just the way it goes.
Yep, absolutely. Yeah, there'll be a lot of things that are continually repeated, but that's just because that's how things are.
Yep.
Trade emotionless. That kind of ties into, like you were just saying, don't bring your ego into it. Don't bring your opinion into it. You want to be a robot. We want to follow our rules and follow our system and just execute without any emotion. And that Basso piece right there, that's a little shout out to Tom Basso, one of the emotionless traders out there who I look up to. All excuses are lies. Everything is your fault. When you're trading, there's no blaming anyone. No one else is to.
Well, no, there is someone to blame.
Yourself. Yep. Yeah. So when you're trading, it's all your decisions. If you listen to somebody else's stock tip and it doesn't work out, that's all on you. If the market goes down and you don't sell, that's all on you. Everything is your fault. All excuses are lies. Bad things are going to happen. Steve, I think probably the best way to explain this. Take this one away.
Oh, just listen. This is the simplest thing. Look what happened. January, February, we think we're going to all be rich and our account's going to go to billions. And then a month later, coronavirus. So it's just got to constantly be prepared for bad things to happen.
Yep. And that was Steve's ad. So definitely something we got to keep looking at because he's 100% right. And then that ties right into fear cripples and causes failure. So you can't be afraid to lose. We know these things are going to happen. You're not going to be 100%. There are going to be losses that come, and it cannot cripple you into making and taking actions. So just know it's going to come and just keep executing and doing the right thing.
Fear is the biggest enabler of people to becoming successful. You're probably going to be like, oh, yeah, that makes sense. But you don't realize how fearful you are until you lift that fear. It's just a pretty amazing thing.
Yep. I know that all too well.
We all do.
Yep. And then you got, which it kind of ties into both of those two things above, is just trust the process. You'll win and create wealth. Know that things aren't going to go in a completely upward motion. There's going to be ups and downs, sideways, just like the market is. And you just got to trust the process, keep following it, and long term, you're going to win and create wealth. And the last thing is you got to trade differently in every market, especially as we've seen this past year. Things have been completely contrary to what many people thought was going to happen. And at different stages in the market, you have to be exposing yourself differently. You can't be 100% in when, market's moving sideways and it's up and down and whipsaw action. So you got to adjust to what the market is telling you to do.
The market never allows you to trade the way you want to. It only allows you to trade the way it wants to. So you have to have not only flexibility in the way you're approaching how you're trading, but you have to be flexible and understanding you might not be able to put all your money into one thing. You might have to have 10 stocks at certain points, and then it's going to switch from there. You might be able to, at certain points, put all that money into one stock. It's just going to be different every single time. And you can't get used to thinking trading is repeatable, but it's not repeatable. And you need that flexibility. It's a weird thing to say. I know it makes no sense, but as we progress, that it will make a lot of sense.
Yeah, and I think one of the things I just want to throw in is obviously this is our trading commandments. This is things that we do to kind of remind ourselves. And, there's a lot that obviously falls underneath this. For anyone that has looked at any of the things we're posting, I mean, we're canceled investors. That's the principles and the rules that we follow. And everything that kind of follows this is all in relation to all those rules and principles. So this is just really kind of what we do to really keep ourselves and hold ourselves accountable, to remind that this is how things kind of go and why we got to keep following all the principles.
Yep.
Cool. All right. Next. So this is the agenda. A lot of this stuff will be kind of repeated every week. This week, we're going to go over the current state of the market. We're going to go over industry groups, market leaders, notable earnings that are coming up next week. One of the things that I wanted to personally talk to Steve about was just kind of intraday movements. We'll always tie everything back into mindset, because that's one of the biggest limiting factors for every single one of us. Then we'll go takeaways from just our routines during the week, our daily routines, our weekly routines that we're doing, things we're reading. And then finally, we'll end everything with just kind of our stance on the market, on where we feel things are and where they might go. And if there's any other follow-up questions, we'll always go through those at the end. All right, so we're going to start with the current state of the market. For anyone out there who reads the big picture, you'll see a lot of this stuff looks very, very familiar. First and foremost, we are in a confirmed uptrend. The S&P currently has 3 distribution days, and NASDAQ currently has 1. The indexes as of right now, the S&P is down 11.36% for the year. The NASDAQ is up 0.47% for the year, and the Dow Jones is down 17.01% for the year. Only other notable things, I'm actually gonna now, Steve, I'll switch over to our screen so everyone kind of take a look at the indexes as well.
Well, as Bobby's switching over, the one thing you could see here, there's a stark difference between the NASDAQ and the Dow, and that's primarily because of financial stocks, and they are such a laggard right now. I'm sure we'll get into that later, now that Campos has this up.
So I'm going to bring it over to daily. I actually have a couple of the moving averages written down. Looking at the S&P, we're like just below the 10-day. We are slightly above the 21-day exponential moving average. We're about 5.56 above the 50-day, and we're negative 4.5% underneath the 200-day moving average. And then there's your kind of quick snapshot of what we're looking at on the daily chart of the S&P.
And it's been going sideways for about a month.
Yep.
Which is interesting.
Yeah. All right, so now we switch over to the NASDAQ. As it switches over, the NASDAQ in terms of moving averages, we're just slightly above the 10-day moving average. We're about 3% over the 21-day exponential moving average. We are 10% above the 50-day, and we are 6.5% above the 200-day.
And I think it's interesting because the 50 days below the 200-day.
Yeah, I was gonna say that. I don't know if you caught that. I like stopped for a second. I was like, because I just wanted to make sure I was right. Because like you said, those.
But that could, once that crosses, that could lead us to new highs, or it might not. Who knows?
Yeah.
But it's something to just keep your eye on.
Yeah. And then last but not least, Dow. And as that comes up, we're just below the 10-day. We're about dead even on the 21-day exponential. 3.6 above the 50-day, and we're negative 10.1 on the 200-day.
But interesting, this pattern looks, of the three, the worst. It's lower highs and lower lows. So it's, if the Dow doesn't start to swing through, this market might not continue higher. Although so many leaders are moving higher, which is, I'm sure we'll get into in a little bit.
Yeah. Yeah, and I think that it's like clear, obviously, even with just what we were saying before with how the Nasdaq's doing this year, that tech stocks are definitely performing, as the leaders within this market as of right now. And then the only other thing I thought about just this week, shout out to Mike Webster. This is the first week that I looked into the stock market update on IBD, and where he kind of broke down just every single day the action and how the price movement, volume, and everything was. And biggest thing I got from that was just, I mean, they started off the week kind of rough, as you could see, and then we closed out the week strong, especially on the NASDAQ. So the close was good, but it was definitely some sideways action. But I think stuff that we kind of expected with the amount of momentum that we've had upward for so many days in a row previously.
Yep.
Anything else on current market, Steve?
No, I think we.
Okay.
Yep.
Cool. Switch back over. All right. So moving forward. So now we're going to go over to industry groups. I'm going to bring that up right now. Obviously, one of the industry groups that are in the top performers, that's where a lot of the top performing stocks are going to be. So something that we're going to want to pay attention to. Switch over. Okay. All right. So I'll just read these off, and then Steve, if you got anything specific to say about these, let me know. And then I love this little this related information tab has been great since they've added that, especially seeing these top stocks. So number one this week was computer software enterprise, which was no surprise. And then over here, you can kind of see some of these stock stops: Audio Code, ServiceNow, RingCentral, GoDaddy, DocuSign, all performing pretty well as per the RS lines and EPSs. And that moved up from spot 3 last week. Number two, gold, silver, and gems mining. So a couple of these stocks that we're seeing popping up on our list. I know I keep seeing Franco-Nevada come up on a lot of my lists.
Franco-Nevada, yeah, and a lot of the other gold stocks too. They seem to be performing well. Yep.
Yeah. So that's steady even for the week. That was on number 2 last week as well. And then dropping down from number 1 was retail and internet.
Amazon, Bip Shops, Alibaba, eBay. Although eBay is about to break out, we could delve into that later, but eBay looks like it's about to break out from a pretty long base. It looks pretty juicy right now. It's actually on my watch list from the weekend routine, my weekend routine.
Nice.
Yep.
Cool. All right. Now we're going into number 4, auto manufacturers.
Yep.
So you got Tesla, Ferrari, NIO, Toyota. Tesla obviously being the one really carrying them on the backs of everything.
Yep.
And that was dead even from last week. And then you got number 5 moving up 1 spot, which I think a lot of people have seen, is just Biomed, Biotech, Regeneron, Vertex, Biomarn, Emergent, Biogen. I mean,
yep.
You
had Gilead,
place.
Horizon, Alexion. There's just tons of these stocks that are just moving. I mean, it's a really long list, which usually bodes well for the market. I mean, listen, it could be a couple things. It could be defensive because these companies are going to, have a revenue base because people are going to need drugs no matter what the economy is, or it could be that because of the amount of money that the government is putting into, coronavirus, that these companies are going to benefit. So pretty interesting.
Yeah. Yeah. And I just pulled up a couple. I mean, there's just so many of them, like you said. So,
yep.
All right. So we got number 6, computer software, medical. Let me just pop back over to the top stocks. Vive has definitely been one of them. And then you got a couple others that we're seeing. And then
actually, if you want to learn about Vive, there was a good on the IBD podcast with Arusha Paris. There was a very good podcast that the gentleman on it was a very big investor in there, and they had probably about a good 5 to 10 minute conversation about Vive. So if you want, go to the IBD podcast. It's on Apple and on YouTube. Pretty good. And it's for the week of, it was on Thursday.
Yeah.
So it was at the 14th.
Yep. All right. And that was down 1 spot. Number 7, you got semiconductor Fabulous.
Led clearly by NVIDIA.
Yeah. NVIDIA, AMD, definitely one of the stocks that I have on my list. Looks like it's kind of just about to get to that buy point, but it has been kind of hanging out in that
It's
handle for a
probably
little
about
bit.
5% off its high, if I'm not mistaken.
Yeah, I think you're right about that.
Yep.
And then obviously there's just a ton of others in that area too, and that's
Yep.
flat from spot number 7. Then we're going to number 8. Medical systems and equipment. Dexcom, big fan of Dexcom. That stock's been doing very well. And you got a lot of these other, medical systems and equipment
Again,
stock out there.
similar to biotech, it could just be that these are medical's a great industry. It's recession proof. And it also could be a lot of these companies, not particularly Dexcom, but some of these companies could be benefiting from, the government buying ventilators and all the other associated stuff with coronavirus. So, yep.
Cool. All right. Number 9, computer software desktop. You got Adobe, Microsoft are definitely 2 big stocks that
it seems like go up every day.
Yeah.
They really. Yeah, no, it's just every desktop software company that that's in that group. So
yeah, and that actually just jumped into that wasn't up here, I guess, as of last week, because that came in from spot number 12. So that's moving up. And then number 10, computer software gaming. Yep. So that just moved in. You got Electronic Arts, Take-Two. Obviously, I'm sure this is definitely a lot of people with the stay-at-home play of quarantined and.
I wouldn't even say that. It's just such a pervasive trend. So many people.
Yeah, that's true, because it is a more macro.
So,
it's definitely a more macro trend. I mean, you have people on Twitch.
Yeah.
It's definitely a more macro trend. And then even the mobile gaming, I'm starting to see like Zynga and stuff like that. You're seeing a lot more mobile gaming coming around too. So.
Yeah.
Obviously, one of the main reasons why you're seeing this on the list. But yeah, so that's our top 10 for industries.
If Tecmo Football was in there, it'd be my cup of tea. That's before you were born.
I know. I was just saying. I'm not even gonna ask. Yeah. So I don't think there were major changes. I don't think there really was any major changes. It was pretty consistent.
You pointed out that the only one that went up. Let me see who fell out.
Actually, I have from last week up there. Telecommunications was up there. I think last week might have fell out.
Yeah.
Netflix's group, leisure movie.
Yeah, the movies is what really fell out. That's the only switch actually. Yeah. That was the only switch. That switched with desktop gaming, and then the gaming was 16. So.
Yeah, I think that was it.
Oh, the other one that fell out was medical research. So it was only two groups that switched. So nothing dramatic. No real big sector shift.
No.
So, yep.
All right, cool. So leaders. So we kind of like to divide these into 2 different categories. You have your current market leaders, who are the stocks that are performing the best in the current market, but then you also have true market leaders. And if you're somebody who follows Cancel, you'll kind of see that, there's the Apples, the Facebooks, the Netflix, Google, Amazon. I mean, the stocks that everybody knows that were game changers and changing the way we work, live, and play. And these are those big multi-year winners. Ultimately, those are the stocks that we really, really want to get into, that we want to find.
That's what we're seeking. They're life-changing stocks.
Yep. So, and those are the ones that I personally, I think we talk about this every week. There isn't anything really that's jumping out right now that we're saying is, aside from like the kind of names that we're looking at on the screen, that is new or something that we're like, oh my God, this is a game changer.
I would agree. I listen. It seems like right now, what's interesting to me, going back to the industry groups, there are a lot of little leaders. What do I mean by that? Like in the biotech space, probably the only stock I could say without much, with a lot of confidence, that is a industry leader that could be one of these is Vertex. One that might possibly be, it's not as well known as Horizon. Their chart looks good. They have a new drug. Its valuation is low. That's more of my opinion, but it's playing out in real time. And in the software space, it's like everything. All the cloud stocks are going bonkers. But there's not one stock that I would point my finger to say that this is the one company that's going to be the next Walmart, Home Depot, Amazon, Apple,
Mhm.
Facebook, Netflix. I don't necessarily see it. Listen, I love Tesla. You know, Elon Musk is awesome, but listen. For me to say that that's now when it's up, you know, from 37 to 700, to say that that's going to continue to lead the way it has, I just don't think so.
Mhm.
To take nothing away from the company, I have the highest level of respect for them. But,
Yeah.
you know, again, you're not buying a $700 stock that's already had a, you know, 20 bag
I was just
move.
say,
It's good. You're looking for, you want to buy it when it's at 37. So I just don't see that. But listen, it doesn't matter what we see right now.
mhm.
It will emerge. And listen, we could be missing something. I think right now, probably truthfully, the closest thing I would say to a stock that's about to break out that I would potentially put into that type of group would be Spotify. They're
Yeah.
about 1% off. They have a great base. You can put that up. I
Yeah,
think that would be
I was
something
just gonna
great.
say I'll
Yeah.
switch over to that.
Yeah. That's
I was
probably
gonna
the only
say
thing.
just to real quick, like you were saying, it's not like we're saying that, you know, that Tesla and some of these companies aren't going to, that they're not going to be profitable and there's not a trade to be had there. It's just that, is it the, you know, the multi-year winner that is going to just move the way that
But
some of these Amazons have moved, you know,
But it's interesting because
start.
I think the biggest part of that is the way this correction and coming out of this correction has emerged. We didn't go into a recession this time because of a financial crisis or internet bubble. It
Mhm.
was government imposed. So one of the things let me just take a step back. One of the things why we use the system, it's the best benchmark for capitalism. I'm probably defining it wrong, and I'll probably come up with a better way to say that in future podcasts. But this is it. The Cancelim system mirrors capitalism better than any other system. I know people out there who are watching this are going to be like, well, what about value investing? It doesn't. Value investing absolutely doesn't not mirror the economy. Cancelim and growth investing does, because these are the companies that are the creative destruction companies that are creating a completely new industry and are destroying other industries. So I'll give you an example. Back in the early to mid 90s, what was the companies that were destroying it then? Home Depot and Walmart. And what were they changing? Retail. And where's Sears and Macy's and all those other companies there? But JCPenney's went bankrupt this week. So those
Yeah.
were what people thought were the leading companies, but there was a whole slew of companies that were emerging. And if you're buying the value stocks, yeah, listen, I'm not telling you you can't make money. I'm sure you can, but value is not what is on the bleeding edge of the economy that's going to really change our lives. And that's, if you're going to truly invest and look at this in the right direction, that's what you're looking for. Completely game-changing industries and game-changing stocks that are within those industries. And ready, you catch one of these, and this is our goal, because we would like to do the same thing as you. We would like to make a lot of money, and that's why we're looking at this. And clearly, Spotify is changing the way people listen to music on their phone. I mean, are they the first? No, because clearly,
Podcasts.
yeah, podcasts and just entertainment on your phone. And I'm sure at some point they'll have video, but they haven't. But looking at this chart, it's a great IPO base. It's the
Mhm.
second IPO base. It couldn't be teed up better. They have the sales and earnings behind. Well, not necessarily the earnings yet, but they have the sales
Yeah.
and growth behind them. And it's a global. It's the number one global. I believe I believe they're bigger than iTunes, as far as, or Apple Music is what I should say.
Okay.
As
The only
far
thing I
as
would say that they're doing that I think is what separates them, that's the new in them, is the algorithms that they're using in order to put playlist and new music in front of you that you want to hear. So like I remember when I switched over, I just kind of like went through the app and I just put in all different types of music, and this was in the earlier stages, and now from listening and liking songs and just using the app, I'm getting daily playlists that are telling me, oh, this is your country playlist, this is your, you know, rock playlist, this is your, you know, rap playlist, this is your, and it's all songs that I'm interested in, and then they're sprinkling in new stuff. So they're doing something that I think for somebody who loves music, it makes it a very enjoyable experience, and I mean, to pay a monthly fee and have access to every single song at your fingertips whenever you want.
Yeah. I would like to say it's the Netflix of music, but it's not, because Netflix was so unique and no one was even close to doing what they're doing. I mean, you have Amazon Music, you have Apple Music, you have Google Music, or whatever the hell Google Music is. You have Cirrus, and they bought the other one that was similar to this that nobody liked.
YouTube.
Pandora.
I know some people are out
Pandora,
there using YouTube as a music service. I mean, there's a lot of other stuff out there. I just they're clearly doing something.
Correct.
Yeah. And then the only other thing I would say, like that, just in terms of like a different type of leading stock, like a Shopify or a Peloton. I mean, again, I don't think that they're changing the game too crazy to the point yet, but
Peloton might. I could argue with that. Peloton might. But again, the thing about Peloton is, I mean, my biggest fear of Peloton is it's not something that people can easily copy. And I think at some point, I mean, this is how I feel. I hate projecting my opinions to the whole rest of the world. Man, I can't wait to get back into the gym. I despise being home right now. I mean, and the other part is that, like, okay, you guys will learn this. Me and Bobby both run. By the way, I'm not going to call him Bobby. I'm going to call him Campos. That's what I was calling him. You could
just call me whatever.
So me and Campos both run, and I'm sick and tired of running right now. Not completely, but I want to switch it up. I want to do stairs. I want to bike. I want to do whatever. And like, you just can't do that. I mean, listen, right now, I don't want to buy a Peloton, to be perfectly blunt about it. It's just not my thing.
But you do have on the flip side, and there's plenty of people out there, and I know many of them who they don't like. They know when the gym opens that they're still not going in there because it's just this. Some people have been freaked out to the point where they're like, "I'm buying a Peloton and I'm going to use it too." So there's flip side to everything. The only thing that I always think about with Peloton is that's one of those like cult following type of things where like I've seen through social media that like, I don't know if anyone knows like Orange Theory, like when people do certain like groups like this, I mean, they're bought in and it's like they're recruiting everyone. It's like a cult following. That's definitely one of the things they have for them.
1,000,000%. I think you're 1,000,000% correct. I'm not saying I don't think that the stock is going to be big, and I'm not trying to put my opinion. I'm just projecting what I think. But it's how big. I mean, is everybody in America really just going to get a Peloton? Yeah. And is it something that other people are going to copy?
It's not an Apple where it's like everybody's holding an iPhone there. Yeah. It's not a Netflix or everyone's on Netflix.
Yeah.
But I mean, we're kind of going down a rabbit hole for sure. I mean, this is just one aspect that we're looking at that it's like the end canceling. But and clearly there's nothing that's like saying like, oh my God, this is the next Apple. Like,
and unfortunately for our audience, this is what we do.
Yeah, exactly.
Sorry.
That's how we get to the nuggets every once in a while.
But I'm sure. I mean, I think we have 3 followers right now.
Yeah.
So
probably.
At some point, we'll start to listen to people's emails, and we'll be less annoying. I promise you that.
Yeah. And then it's just it's work in progress.
Yep.
And I have a couple stocks just up here that are just like current stocks that are doing well. I mean, I think everyone can kind of see these: Dexcom's, Nvidia, DocuSign, Coke, Chegg, Fortnite. Zoom, PayPal, like these are like, I mean, they're the stocks that everyone's seeing that are ripping up right now, and they're doing well.
One I would like to highlight, and this goes to, if my friend Mark is going to watch this, it's a shout out to him. GTBIF.
Yes.
If you go into the marijuana industry, this is actually interesting. The reason why is a shout out. My friend sold his company to Green Thumb, so just interesting. So this is the way the market works. From him, he's been banging the table telling me this is the industry leader in the cannabis industry. And if you look, there's another company that's similar. And so basically they had their earnings this week, their sales, they didn't earn money. But from reading the financials, I believe that they are cash flow positive. There's a couple of items in there that make it a little bit not as clear, because what they do is they sale lease back their property. So they develop a property and then they sell it and lease it back from a REIT, a publicly traded REIT. And so it just masks that cash flow, because they got, I believe, $50 million in cash from it. But then they take that and they build other facilities. So the interesting part is their sales grew 35% quarter over quarter, and it was at 268% year over year.
268.
Yeah, 268 year over year. So clearly, in an industry that, as we all know, is emerging, and it's excellent financial results.
Yeah,
and
triple
if you look
digits.
at if you look at their
Nice.
volume, it's a very, very large volume week for them.
Yeah.
So, and in fact, I'll say this: Friday,
Actually,
when
I
they
was
were
looking at daily,
if you go to the
because there was that
Friday,
one day that was like, yeah, that was the day.
yeah, Friday was their biggest volume day since their IPO, first couple of weeks, which I would think is somewhat significant. So yeah, it looks better. Believe it or not, it looks a lot better on a daily chart than it does a weekly chart. So
Yeah.
and then so the second stock I wanted to highlight from that is CURLF.
Seconds. You said CURLF?
LF, yep. You're going to see a similar chart. And he said these are like the two leading, I don't know why nobody's talking about these two, but these are the two leading stocks in the United States. And I'll give you an example because we were talking about this.
I'm putting this on a list, so keep going.
Yeah, everybody is talking about all like Canopy and all the other Canadian stocks. But the fascinating point is Green Thumb, their two biggest states, I believe, are Pennsylvania and Illinois. And if you look, they have about the population of those two states is somewhere like 25 or 27 million, and Canada has 33. So that's just two states. They're also in Ohio, Florida, New Jersey, New York. So if you add those up, the population of those states is bigger than anything. It's like probably double or triple the size of Canada. Mm-hmm. So at some point, these companies are going to have a bigger footprint than Canada, but yet their valuations are less. So the last one is another company in that GRWG. Another good chart you're going to see. And listen, the sales growth of these things is astounding. And by the way, Cureleaf reports this week.
WG.
Yep. And this company provides like Grow Generation provides, they're like the hydroponic company. They supply all the
material.
It says it up there.
Oh, yeah.
Read what it says.
Yeah, so it says engages in distribution of organic nutrients, soils, hydroponic equipment to commercial home growers.
I don't want to cop out, but I'm not sure exactly what the hell they do.
But I mean, from what it sounds like,
go look it up. Yeah.
They're the components that they're all the materials. They're the fertilizers. They're the soils. They're the
I think it's more than that. They're a distributor of all that stuff is what they do.
Oh yeah,
so,
you're right.
So it's all the stuff that the supplies that go into it. So basically going back to what I said about Green Thumb, these companies don't have an enormous amount of cash. So they're not going to keep a lot of inventory, and they're going to go to the distributor. If anyone's been in construction or pool business or something like that, you go to when you have one of these smaller companies, you go to even bigger companies do go to distributors when you have this like service type industry. You go to distributor who will keep all the stuff in stock, so you don't have to lay your money out. Particularly for these massive growth companies who it takes a lot to build a facility or a store. They're just gonna go buy their stuff from Generation Grow. So Grow Generation. So that's that. Listen,
that's an industry obviously we've been watching for a while. I mean, it's not that there's anything that we're like, oh my God, this is a stock you got to be in right now, but there's clearly finding the leaders in this industry is eventually going to be lucrative. So
absolutely. Because listen, like this in gambling right now with the gigantic holes that the states have in revenue, they're gonna want to listen, they're gonna want to start taxing people's poker games at home. So it's gonna be bad. So all right. Cool. So that's really it on the leaders. I think we're hitting.
Switch back over. Yep, so we covered all that. All right, so I just threw some notable earnings. I mean, earnings is kind of drying up.
Was this last week?
No, this is this week.
Because UA is United Airlines.
No, UA is Under Armour.
They reported last week.
Oh, that's my fault. I saw it on Yahoo. They had it up that they're reporting.
Yeah, no, that's why I was saying. It's just like because they reported last week. But the others look good.
Okay, well, yeah. Correct me if I'm wrong because I'm kind of scanning through Yahoo. So
I know Baba, PPD, and I know Home Depot, Walmart, and some of the other drug and internet and retail companies that report this week. Yeah,
like I was gonna say, there's a lot more biotechs this week. The big one I think is obviously NVIDIA. That's a lot of people are watching. And you got Groupon, Splunk, Baba.
Believe it or not, I think for me personally, looking at this, I think Walmart, Target, Home Depot are going to give us a guide. Tangentially, I'll just say this. This is I was listening to. There are a couple things that lead me to understand why the market's acting the way it is. This is actually interesting tidbits I got off of a couple of conference calls and just lacing them together. So I listened to a company called Shockwave, really good internet company. Not internet company. They do heart disease, invasive surgery type stuff. They blast calcium with this literally shockwave. Small company, probably. I think they did $15 million in revenue last quarter. But they are, I guess, a non-essential surgery company. So they've got, the government shut down. What was it? Oh, non-elective surgeries or something like that.
Oh, so they're one of those people that aren't really, like, you can't really go and get their kind of procedure
Correct.
done. Okay.
Correct. So what they said happened is they saw complete softness the second, from March 15th through April 15th. But then at around April 15th, and I guess this, tracks the curve of the virus, they all of a sudden started beginning to get traction again. And I guess it's in states whose hospitals weren't overwhelmed, they started to allow those elective surgeries to come back again. And since then, and they reported, I think last week, I can't remember, it was Wednesday, Thursday, or Friday, and they were basically saying that they've seen a beginning to be a rise. But I also heard the same thing on several other companies' conference calls. I think, believe it or not, it was either MasterCard or Visa who came out with a very similar pattern. And it's actually interesting. I think even Chipotle and a lot of these other companies have had a similar pattern that everything collapsed for the last 2 weeks and first 2 weeks of April, but then things began to even out. So if Walmart and Target might have a different experience because, just a million different factors. But what I'm saying is that maybe the economy is started to begin to get traction. And, this is an interesting.
Like these will be kind of like, they'll be telling us what's going on by what's going on.
I'll explain it in a financial sense. So basically, if you're a CFO of a company and you can actually, in every recession, this is how it works. Every company cuts until they get to a break even or some sort of profitability. So if a lot of these companies are starting to see a bottoming process, you're going to have a lot less cutting. And listen, I guarantee everybody saw the news this weekend. You see it on whether it be Twitter, Facebook, or Instagram. People are going out now. And you see people, like, I was listening to Joe Rogan last night. He was talking about how he went to a restaurant when he was in Florida last week. Other people in Texas, I believe, is open. I believe Ohio is open. So people are starting to go to restaurants and start to participate in the economy again. So companies can begin to define what their true losses are. Does it mean that that's where it's going to, settle out? No. But if they could begin to operate at some sort of level, people are going to stop being laid off, and the disastrous 2 months that have occurred will begin to abate, and then the economy could begin to get some traction, and people could begin to get some confidence back. And listen, some other businesses can start to open up, and that's how the economy begins to get moving.
Yep.
So that's what I think could be occurring. But listen, is it? I do not know. So these companies are going to lead us down that road. Listen, if Walmart or one of these companies that says there's a disaster, that could be something different. And then interesting, actually, and this is just another note, Elon Musk was talking about what happened in China and how basically things are almost back to normal, which is remarkable. But listen, let's hope. Listen, there was a NASCAR race today. There was a UFC fight last night.
Golf.
That's right, golf. Things are going to get back to normal. So it's really fascinating what the hell's happening. So I listen, I thought people would be scared out of their wits to do things. And you're seeing, I saw something on Twitter. Listen, I have no idea who this woman was, but she was going around angrily scolding people who weren't wearing masks. And there was I believe it was California, but there were all these people not wearing masks, and she was having a coronary. So
but you're right. I mean, I think people are getting to the point where, you can only do this for so long. It's human nature. You want to be interacting. I had a friend who was in Queens, I think Forest Hills or something along those lines. And he sent me videos. Like, I mean, people were up and down blocks, hanging out in front of bars, drinking. I mean, was like,
In New York City,
people want to go back to what
there's
their
an article in the
lives.
Post. There's an
Yeah.
article in the Post that people are drinking it in the city. Listen, it's here's the problem, and I don't want this to go down this rabbit hole, but people can only take not participating in the world so much. It's like we're saying about Peloton. People want to get out and do things. So who knows what we're at. I don't want to predict the future, but I just, listen, the market is doing what the market is doing. And I know a lot of people think that we're going to retest lows, which could absolutely happen. Or we can go higher. I don't know what it's going to, this is one of the few times I literally have no opinion. And you have to just prepare your brain for both outcomes and be emotionless and just go with the market wherever it takes you.
Yeah. Yep, absolutely. All right, cool.
I mean, listen, can I just say one thing?
No, go.
If you looked at what we showed you with the S&P, the NASDAQ, and the Dow kept on going down. The NASDAQ was going back actually higher, and the S&P is kind of neutral. So it's really interesting that it's flattened out, and the market's trying to figure out which way we're going to go. We're going to go the way of the NASDAQ, or we're going to continue to go down with the Dow. I don't know.
Yeah. And if you like anything IBD that just kind of listen to and reading, and they're all saying the same thing, like having the sideways action is very expected because of how rapidly we came off of that low. And so it's like that sideways action. And now, like you said, trying to figure out where is this going from here?
Yep. And by the way, one thing, just don't watch CNBC or the news. That's if there's one thing you get out of here. I swear to God, it's
the biggest takeaway.
We discuss it. Yeah, we didn't discuss it yet, but the worst thing you could do is watch the news. And I have to thank Michael Covell for that. He really ingrained that in my brain. And the less you watch of the news and people who are in the media, the better off you're going to be.
Yeah.
So,
I think the first 150 trend following podcasts, I got that drilled in my head, and that probably changed the course of my trading from going from smooth to pulling my hair out when watching the news and figuring out what.
By the way, another very good podcast, trend following with Michael Covell. Absolutely worth listening to. A lot of really great investors on there. A lot of great content.
Yeah, legendary investors.
Yeah.
All right.
And by the way, we will be constantly shouting out to great content because there's tons of it.
Absolutely. All right. Cool. So this was kind of, Steve, I wanted to bring up to you because it was something that I kind of just from following the market this week. Just thoughts I was having on intraday movements. And then I just wanted to kind of see your take on a lot of this stuff. So a couple of things, I got an IBD Live subscription, and they were kind of talking about a lot of different things. One of the things they were talking about was just letting the day play out sometimes before you make the decision. So first off, I said, I know obviously if you hit your 8% loss or whatever your pre-planned loss is, that doesn't matter. If you hit that point within the day, intraday or not, you sell. There's no waiting to see what happens or at least that's what I normally try to do. But that's why I'm asking your opinion too. And then the other thing that I've done a lot is I get to those where I get in a buy point and the stock's moving up, and I'm itching at the opening bell to buy right off the bat. And then I see more often than not, the stock moves maybe forward and then retraces. And then sometimes I'm kind of caught in that slight down on the first day. So I wanted to see what you were thinking.
All right. The first one I'll approach is buying. I'll give you an example. I wanted to buy Green Thumb on Friday. I listened to their conference call on Thursday night. I knew that this thing was going to go. Right out of the gate, I believe it opened up at 950. I apologize, 850, and I could have bought it right then and there, and it started going down, and I was like,
Hey, why are you doing this? I'm actually bringing that up because
and then all of a sudden it just spurted right up. It ran from 850 to 9, and I just listen. It's really, really difficult because, again, on a shorter duration, you could be right, you could be wrong. Within a day, it just, you can see, look, go down right there. Look at the first bar. So I was looking at this at 9:30, and you can't see, but it opened up at 850, and then it went down to, and I was like, oh, good. So okay, because this is going down, and then it just ripped.
Yeah.
And listen, I should have bought it, but whatever. So listen, it's very difficult to buy things intraday. It's one of the harder things to do, especially where clearly there's a shit ton of demand in that stock.
Mm-hmm.
And Sometimes you miss them. That's the hardest part. That's not the answer anyone wants to hear. But on the other hand, if it's getting weak for a reason. Mm-hmm. So this is where the mindset part of this game comes in. Sometimes, I know the IBD guys tweet this and quote this all the time, but you can't kiss all the babies. And sometimes some of these bigger winners are going to get away, and you're going to have to wait till the next base to buy it. It's just that simple. We're human beings. We're not going to be perfect. I can tell you this from my life experience trading stocks. Sometimes I'm good. Sometimes I really suck. But I try to do the best I can. And you're going to make mistakes. And it's just, you don't know. But what I try to do is basically what I see a lot of times, and this is just my rule of thumb, it really depends on the conviction I have.
Okay.
One of the things with green thumb, and I'll just tell you this straight up, the reason why I didn't pull the trigger immediately at 9:30 is it wasn't a perfect base. So it was a trickier buy point, and I wanted to buy it at my price, which, listen, I could have ended up, technically that day I lost 50 cents or 70 cents or whatever it was. But it gets trickier when you don't have that exact buy point. If there's an exact buy point that it's breaking through, you know what stock bring up? eBay.
eBay, okay.
Yep. This is going to show you a better, because this is what I want to trade. I don't necessarily want to trade. Here's the thing. A lot of times when I don't buy these stocks that have proper bases, it just gets to be a little bit more, put it on as daily.
Sorry, I just pulled my headphones out.
No, it's okay.
Okay, daily. Gotcha.
Yep.
Okay.
So you could see it's he has the pattern recognition. The blue screen is the buy point. If this were doing what green thumb is, I would have bought it without any hesitation, without worrying about it, because then I would have had a defined place to stop out from, and it would have just been easier. Could I have put?
Because that 5% off that pivot is your extension point.
Correct. Whereas with green thumb, if you go back to green thumb and go to the daily, it's a much trickier situation, because the day before it closed it as high, which clearly people knew that this was going to be very good.
Yeah.
And it just got to be, it was already at 850. It was $1 above. If you look, I would, if it was close, go back. It was at that 755. So let's say that's 70. Yeah. Just go to the 755. Yeah. If it was at that point, I would have had a different thought process, but it was already at 850.
Uh-huh.
So that's where it had closed the day before. And it just makes it a little bit more difficult. I mean, could I have put my sell point at 7? Sure. But at 7, it's $1.50. What is that? $1.50 off of 0.5 divided by 8.5 equals, would have been a 17% loss. I'm not doing that.
Yeah.
Which is where its real sell point would be. But listen, that's why you can't, I'm sure there's going to be a point where I'll be able to buy this, and it'll be a logical pattern. So, but getting back to eBay, that's what you want to do. So it really depends on the pattern.
This is a true, you got true base.
Yeah. So
stock.
Yeah. So I'll give you an example. So that's exactly at the buy point right now.
Mm-hmm. Yep.
Where you see that. So let's say it was 3%. You bought it at 3% above the buy point. Technically, you're going to have to allow yourself for a 10% loss, not a 7% loss, because you're buying it above where the actual
pivot is.
Yep. And that's how I'd say that. So what was the second question? Does that answer the first?
Yeah. So I guess you're saying a lot of it's going to be based on the stock, the chart, and sometimes it's just because I think where I run into this is I get a stock that's breaking out, and sometimes it's like right after earnings, because obviously that's where some of the bigger movements come. I know it's breaking out into a buy zone, possibly through a buy zone, and a lot of times it's on earnings, and then the stock opens up, and I'm like, do I buy in that first 5, 10, 20, 30 minutes? And then sometimes I'm like, let me get it before it goes through the buy zone, because it's like, let's say 4% extended from the pivot, and then the stock retraces 2-3%, and I could have got in almost at the pivot as opposed to 2-3% above the pivot.
Yeah.
So,
listen, but
but
I'm not,
I guess
I'm not,
that's you're splitting
yeah,
hairs at that point because obviously I'm not buying the stock in the thought of that it's only going to go up 5%. You know, obviously trying to
yeah,
get 20+% on it.
yeah. And that's that. I mean, listen, here's the key, at least how I view this. Every time I make exceptions and I buy something that's not out of a proper base, it makes my life harder. And I'm not a smart guy. I'll admit this to the internet and the world. I'm really not that smart. And the more that I break discipline, it's like anything else. It's like a diet. I'll tell you one of my funny stories. That's completely aside because Mr. Bobby Campos is in much better shape than me. And he has lost a lot of weight in his life. And he always makes fun of me that I am on more of an keto diet and that I'll eat hamburgers from fast food restaurants as a snack as opposed to eating something else. And he trashes me. And he considers that breaking discipline. Argue what you will. He's right that it's garbage food, but it's less garbage food, I would say, than what my other choices are. So the point is, when you make bad choices in life, you're going to end up with bad results.
Mm-hmm.
Stock investing is not, and listen, this is why we say don't watch the NBC, because they're not giving you any, you're not using a set of rules. The more that you use rules, the easier life gets, and you don't have to think. And like I said, I'm a stupid idiot. All I have to do is look at a piece of paper with the rules, and that's it.
Mm-hmm.
And so the more I guarantee you this, that when I keep my discipline, I have excellent results. When I break away from my discipline, my results blow. So it's that simple. And I know Campos thinks the same thing, and I guarantee every investor out there does. But at some point we get hubris, and that's where we get messed up. But that's why computerized trading is beginning to be a bigger thing. Mm-hmm. And I'm sure at some point we're all going to be computerized trading and just putting in systems and looking at stocks and, just put in a stock and then put in the automatic loss, automatic point, and try to figure it out from there. So
one thing that I love, and it's just to talk, because anyone who's never traded before is just getting into trading. It's like, and I did this first. Like I read How to Make Money in Stocks, William J. O'Neill. I read it. I'm like, no, this makes complete sense. I just follow the rules and no problem, easy. And a lot goes on in your head, and all of a sudden you look back and you're like, why did I not listen to a thing I told myself to do, even though it was that simple? And that's what's funny, because you even see in the computerized trading, like even when you say people are going to start doing that, I mean, there's how many of these big quant traders, computer traders, they build these systems, they back test them, they say, okay, this is proven, it's going to work. And then all of a sudden something happens that's odd, and they're like, turn it off, change the system, do this, do that. And they go and they basically put human intervention into this computerized system that's supposed to know what it's doing. And then fast forward, and sometimes they're wrong.
Because the computers haven't seen everything as well.
Yes, that's true. Well, I just meant more in the fact that, like, even when you're putting in something into a computer and you're saying, I'm just going to let it run, your mind still gets into it sometimes. And
of course. Well, listen, a computer system is only as good as the algorithm that's in it.
True.
And if the algorithm hasn't seen something, listen, a perfect example. Look what happened to oil about a month ago.
Yeah.
It went, guaranteed there were a bunch of investors who lost a shit ton of money because the algorithms couldn't handle a negative options contract.
Yeah.
Understandably so.
Probably went haywire.
Yeah, but that's part of the game, man. And we all have to, venture into these areas where our brains aren't ready to, handle that moment. And we just gotta, discipline's the only thing that'll keep us from making big mistakes, which is what destroys you. So
yeah. And the only other thing that I kind of like, because a lot of this was a conversation I was having myself, and then I wanted to see your opinion, but at the end of the day, I just told myself I can't get too caught up in the intraday movements. And I said that before, where I was like, I'm not buying the stock expecting it to go up a couple of percent. Like I'm buying this expecting a bigger movement. I got to worry more about the weekly chart. I got to get in at a good pie point, and then sometimes those intraday movements. Yeah.
Okay, you have a thing on here about the 8% loss. One of the things I was thinking about, because you had asked me about this earlier in the week, it's something I have to implement a little bit more, and I could say I haven't done a great job at this. Buy with the daily, sell with the weekly. And
that's a good point.
And here's the thing, and you know this, depending on the day, if you have a massively down day and your stock hits 8%, and you're way outperforming, and this isn't a position that's going to destroy you, it's not going to be the end of the world. More than likely that you have to sell it at that point if you want to give it another day.
Mm-hmm.
Usually, but listen, it depends on the news. You know
I
what
was
I
just saying, it
mean?
also depends on the state of the market.
Yeah, you can take a little bit of that. I don't advise it, particularly when you're starting. If you remember when you first started, that was it. That was the rule, and there was never an exception. Now you have a little bit more experience. When you have a little bit more experience, you could do it, but it also depends on your portfolio. Like right now, I wouldn't be. I am not taking bigger losses.
Mm-hmm.
I'm not. We talked about this. I bought Pinterest, and I believe the gap down. I believe a 16% loss because it gapped down that much. Or slightly more than where my buy point was, whatever it was. I was down 16%, and I just sold it. That was it. There was no, I think I let it go a day because it had bounced. But at the end of the day, I ended up selling it, and that's that. And listen, it happens sometimes. You get something that gaps down. It's twice as big as you think, but you just got to sell, and it just sucks. And you know what? Again, I'll buy Pinterest back if it gets back. Makes that 16% back. But I'll have the opportunity to buy Spotify or some of these other stocks that are setting up while that's grinding through its trying to get back to where it was before. So
yeah, like you said, I like that sell off the weekly, because
yeah,
especially even just like I've tried to become more conscious of moving averages. The movement that we had up, like there's a lot of stocks that are so far off the moving average that having a couple down days in a row and maybe retracing 3-4% is like, it's kind of expected. But looking at it in that single day, you're like, oh man, I'm giving all my gains back. And then you take a step back, look at the weekly chart, and you say, I'm not really doing, the stock's doing what it should be doing. Nothing's telling me that the direction's changing just yet. So like
you're gonna know if it's the stock of the market, and that's where
that's
it
true.
becomes. And listen, it depends on. It's such a listen. Ultimately, I'm probably sounding like the biggest hypocrite of all time, because one of the first thing we say is discipline equals freedom. Okay, 8% is at the furthest bound of a loss you want to have. This is probably people going to be like, what's up with this guy? If I were killing
Won't be
it,
the first time they say that.
of course. If I were killing it right now, if I were positive, I would probably give things a little bit more of a longer leash, and I'd go to a 9 or 10% loss. But it depends on the conviction I have in a stock. But again, I'm not in that position right now, so I'm going to limit my losses to a certain point, and that's the end of it.
Yeah.
So.
And I think we all know that the main reason for that rule, it's like you don't want to turn an 8% loss into a 15-20% loss.
Yeah. Listen, you could own the airlines, you could own the cruise companies, you could own hotels. It could just be a disaster right now, or the banks. I mean, geez, the bank stocks are terrible. So
yeah.
All right.
Cool.
Next.
All right. Well, obviously we're on the aspect of mindset. And you kind of told me to put this in here, which was just letting people get inside your head. So I'm reading Reminiscence of a Stock Operator right now. This is one of the annotations that is in there. So it just says, one reason that Reminiscence resonates with professional traders is that they have all had the experience of making the mistakes that Livermore makes, both here and anywhere else. In this case, the sin is changing your mind on a position after receiving well-meaning, persuasive, but erroneous guidance from a friend or a colleague. Being flexible is a valuable trait, but taking advice in the form of a tip without any new underlying data is dangerous. Learning to trust his own instincts and play a lone hand based on his own judgment of fundamental conditions and evidence from trading patterns was a milestone in Livermore's development. Though this was certainly not the last time he would have to take this lesson. And that's one of those books I think I've seen so many times. It's like he lets somebody get in his head. It never benefits him.
Yeah, but I think what we're talking about is trying to compete against someone else or trying to prove something to someone else.
Okay, that aspect too. Yep.
Yeah, the whole key. Listen, you got to just do what you can do as best as you can, and don't worry about anyone else. You're always going to hear of a person who you're going to be envious and jealous of. But you know what? If you begin to try to juice your results and try to move it, try to do what that person's doing, you're probably going to fail. So just do what you can do. Like, ready? We were talking about running before. I run, if I'm lucky, a 9-minute mile. Sorry, world. If it's longer, like this weekend, I ran, I think, 10.5-minute miles for 5 miles. It's terrible. So I had a bad run. Big deal. Campos runs, what do you run? 6.5?
in the past.
7.
I run fairly fast. Depends on the
Yeah. So
difference.
he runs a 6. So if we're running a race, which we did in Stony Brook in October,
Jim
if
Simon's
I,
neighborhood.
we actually probably passed his house. Actually, I think. Believe it or not, I think.
I know, that's why I brought it up, because you're right around the block from Jim Simon's.
Okay, there we go. So if I were to try to keep up with Campos, I would have been and had the absolute worst race, because that would have been in my head the whole entire time. So interestingly enough, it was an out and back race. So I saw a guy, Campos usually is in the top 10 of people. So I saw that he was 6th, and I was going, I hope he's not getting in his head and trying to beat the first guy, because the guy was so far ahead of him. Not anything that he did bad. The guy was just an amazing runner. And, he probably wouldn't have performed as well as he did, but he didn't. He just cared about himself. And if I'm not mistaken, you beat some guy the last half mile. Remember that race you were telling me?
Yeah. I was kind of on the guy's. I kind of played little mind games with the guy. I was kind of on his heels for a while.
You see, you got in his head.
I did. I am. That is one of my main goals in our race, for sure.
Yep.
But I see what you're saying, and I'll be honest. And we had this conversation before, and I know he's going to listen to this, but I'll say it straight up right to this. I mean, I have one of my buddies, John, who's getting into trading, and I let him get in my head too. I mean, I wanted to prove to him that I knew what I was doing, and I made like my weekly performance on my list. Like, I was getting frustrated when I had a couple down days, because in my head I'm like, oh man, now I'm not doing, what I think I'm doing. And, I'm gonna have to talk to John and be down for the week. And I let him get in my head. And luckily I caught myself with a couple of days, and we had a couple of conversations to knock myself back in a sense. But I mean, you can't allow that to happen, because it just makes you make stupid decisions.
Yep. So,
and then I just figured I'd throw this in there, because obviously it's kind of the name of this channel, but again, discipline. It's just the importance of the weekly routine and not getting complacent. There was somebody, excuse me, because I forget who exactly. There's a couple people I was talking to on Instagram, and we were talking about doing the work no matter what kind of market you're in. And, when you have a bad market and things are down, that's probably the most important time to be on top of the ball and doing your work and being ready when things turn.
But the funniest part is it's easier than when when things are good. It gets to be overwhelming. When things are bad, you get to see who the real great companies are versus who the crappy companies are.
Sticks out a lot more.
Yep.
Cool. All right. But yeah, basically covers mine. So 1 second, sorry. Okay. So this was just a couple of takeaways I had from like my routine. So I had mentioned before that IBD Live, they have a free trial going on right now for 2 weeks. So I tried that out. I really, really liked it. If you're somebody right now that's like staying at home and can pull up into the screen while they're working from home, or you're somebody that maybe like I do, or kind of you're working shift work and maybe you're not working in the morning, you're working at night, they have the IBD Live stream. Starts 10 minutes before the bell opens, and it normally runs about an hour, hour and a half, sometimes even a little bit more. And you can have guys like, Arusha, Mike Pierce, Mike Webster, who else was on there? Scott O'Neill. There's a ton of these guys on there. They're all going through what the market's doing now.
Just some of the best pros in the whole business.
Yeah. And I personally thought it was great, just because it gives you a look into what these guys are thinking. They're talking about the stocks, the charts, the movements. So just a lot of like on the fly information that they're kind of giving out, which, I don't think you can get from reading just the book. It's stuff that they're going to just be spitting off the top of their head. So I don't know if you've started it yet, Steve, but I thought it was great.
No, I have not.
Yeah, it's definitely something worth checking out for sure. And obviously it's free 2 weeks, so it's definitely worth it.
There you go.
The podcast this week, which you had mentioned before, one of the big things that kind of stuck with me is they just kept mentioning that this market is going to be an accelerator for innovation. Like, clearly there's a lot of changes that are happening, and we need to kind of keep an eye out for who's going to capitalize on those changes.
Like I said, I when I hear stuff like that, to me, I hate to say it, you're going to despise what I'm about to say. It's nonsense. Everything the whole point of the system is all about innovation.
True.
So,
all right, it's fair.
So,
but you can't say that it's not going to push things a little faster.
No, listen, everything pushes. So you know what I mean? Like, you just have to be constantly aware of that. And this stock, ready? It's just, the stocks are going to emerge and you're going to know it. It's just a weird thing. It's, I know people like to make these grandiose statements, but to me, there's constantly innovation going on from one of our favorite topic, running sneakers, just in the past 5 years, about how, Hoka, which is Deckers, has changed the whole entire, how they've changed the whole entire running sneaker business. And it forced Nike then to come out with the carbon fiber sneakers, which if you don't love the sneakers, it's ridiculous what they're coming out with. That's not even in technology and things that are as apparent to people, but pretty interesting.
Yeah.
So there's always, it's always coming, and you just have to be aware of it. And that's why being opinionless is so important, because if you have opinions and you think you know everything, you're an idiot. You don't. Things. Let me think of a stock that I'll give you one. Amazon. I fought Amazon forever, because one of the funniest things is, I'm not going to lie, I fought Amazon when they first came out with Prime, and I didn't understand it. And I'd be like, who the hell is going to pay $20 a month? Whatever. They're not $20. What was it?
No.
$10 a month. I think it was $9 a month.
Yeah, somewhere in there. Now they've changed it a little bit, but
when anything above like $20 is free shipping. It's just, I was like, are these people morons? Did they do the math? But then all the other things that are, with it,
speed
and
of
how much more.
delivery and
Amazon
they've
Prime,
come up, and there's so much stuff now.
But when they first came out with Prime, it didn't have this. I don't think it had.
It was just the delivery. It was like,
it's still 2 days, I think. So whatever it is. So, but I fought that until I was just like, I'm an idiot. This is dumb to fight. I think when I realized that I was stupid is about a year later, when they came out with when AWS became a thing, and that's where I changed my whole mind. But listen, but that's why you can't listen. That's why you can't, when things are going up and you're fighting it, go do more work and go really look into it, because you'll be surprised at your opinion being wrong. Because if you write down, I'll just be what this whole podcast
how it started
video is about, is because me and Campos would like to keep inventory of our ideas. It's great if this thing takes off. If not, we're going to have an understanding of where our ideas are. But if you write down your ideas and what your theses are, you will be sad to find you're probably right about 55% of the time, even though we all protect ourselves and think we're right 100% of the time. Sorry.
And that's it's a good point, because I know there's a lot of things we talk about. We put our opinion on like this stock and why we like it and why we're this, but at the end of the day, we're going off what the market's telling us, and our goal is to not argue. If a stock's moving, it's telling us that something's going on with it, we're not going to argue about it. And, our opinions are just kind of just to say, hey, this is what we think, but we know very open-mindedly that we're definitely a good chance that we're wrong.
It's this opportunity. It comes down to this simple question. Do you want your opinion to be right, or do you want to make money?
Yeah, it's the best way to put it. I'd rather make money.
yeah, dude. Listen, I'll give you an example. I hated Chipotle. This is actually a pretty funny story about Chipotle. I hated Chipotle because back in the day when Chipotle first came out, this is going back to, I want to say 05 or 06. They opened the first one. It was right by my office in Uniondale, and I was eating 2 burritos at a time.
And you wonder why you can't run fast.
wait for lunch, and I didn't realize that they were 1,000 calories each. And someone said to me, those are 1,000 calories each. And thank God I wasn't using sour cream or anything like that. So it was a little bit less. And I was like, listen, I could eat. We'll get off into that tangent another time. But I was like, this is the worst company. Their things are I can't believe they have this much calories. I think it was like 500 calories each and maybe 1,000. Yeah. So I hated Chipotle ever since then. And then one of the best things I ever did is in, I think it was 08 or 09, probably 09 or 010, I bought the stock because I was like, listen, I might hate it, but when you can buy something, right? When you can buy a product that you hate, you become a professional investor. That's the God's honest truth. Yeah. I could sit here and put my opinion on it, but and give you my little anecdotal story, but their food's great now that they came out. It was actually before they came out with bowls. That was the big thing, because the burrito itself is so many calories. So that's why I hated it. But once they came out with the bowls, and now I go to Chipotle all the time and eat the bowls. So so stupid. But that's it. That's the key. Yeah. If you could buy products you hate and everyone's using them, you'll become rich.
Yeah. Cool. All right. IDB weekly paper. Like the biggest thing I had coming off of that was just that online grocery trend, and they even said like whether or not it sticks. I know personally, like me and my fiance, we've had some kind of bad experiences with, I forget which one we were using, but we ordered a couple things. We ordered, like, we wanted a watermelon and it came as a cantaloupe, and like there's just we've had some bad experiences. So you know, is there somebody that's going to win that? Is it going to be something that stays in a longer term trend? Who knows? But that was the kind of biggest thing that I thought was pretty interesting in that paper. That was kind of the headline article.
Yep.
And then biggest thing for the week for me was just the stock market update. I found it this week, and I think Mike Webster does an excellent job of sitting down at the end of the week and just breaking down Monday through Friday, price and volume action. What does that mean? And it's done in such a concise way where he's like, here's the facts, here's the good things about it, here's the bad things about it, here's what this actual action meant, and here, kind of moving forward, what we could expect from that day, and then carries it each day and then summarizes the week. I know for me, it's helping me to kind of sit back after the week's over and just say, like, what occurred in terms of the overall market in the week, and how is that going to help me moving forward in terms of trading in the following week.
Yep. So. And listen, we can't say it enough. IBD, Mark Smith, podcasts, anything, Twitter, Instagram, anything IBD, phenomenal, the best.
Yeah, absolutely. Cool. All right. So this last little bit is, I guess, kind of like we said, we don't want to put our opinions out to the point of saying like we're standing by our opinion, but obviously we have a feeling on like where we stand on the market right now. And that is a fluid state that we're sitting in. But how do we feel right now? Like we said, so we can kind of look at it a year from now and say like, hey, this is how we felt. This is what we were thinking. How close were we to what actually happened? So
can I start?
Steve, I was going to say you should definitely start this one out.
Okay, this is easy for me. So doing my research over the weekend, the banks look horrendous. If they don't turn around, the market's not going to turn around. That's my stance. Because you can't have an economy without financial companies and without loans. At some point, the government's going to stop their PPP loans and sending out all the stimulus, and the banks are going to have to do the heavy lifting of loaning money to people in the economy. If the banks are not at a proper valuation, it's going to be hard for them even to go out into the capital markets to loan money. So to me, that's one of the big, it completely contradicts everything I'm saying here. I'm looking for leading stocks, but I'm keeping my eye on that. And again, so I'll keep my eye on that. And I'm not looking for them to purchase them. I'm looking at them to stabilize and not to continue down to new lows. The other thing I'm looking at, like we both said, the S&P and the NASDAQ are both in like I'll just say Darvas box. You'll learn in the future what that is. They're in this consolidation pattern, and if they break out from there, then it's going to be more money to be buying on. So right now, I literally have no opinion. I have a small short position on as a hedge, which I rarely do, but I do right now, and I'm along a lot, so that's where I am. I really don't have an opinion, and however this reconciles, it's fine with me. Yeah.
I mean, for me, like, I'm cautiously long for, a lot. I mean, I have a lot of stocks that have moved up very, very well in this recent movement because I've just kind of, followed through. Day came through. I bought stocks and I let the market pull me in. But I mean, I'm taking profits. I'm not so like this thing's going to keep going through the roof. Personally, I think that there's a good chance, and I think a lot of these big investors are saying the same thing, that there's a good chance we go sideways for a little bit. Number one, just because the moving averages, I mean, we're moving those a little closer in, and the other aspect of it, like you said, we don't know what's going to happen. So that Darvas box could be just kind of floating around in there, and we could go up, we could go down, but I'm kind of like, I don't really know. I'm at a point right now. I'm just
stocks are moving up, so I don't care.
Yeah.
But like the truth is, I'll just keep following them. And if they make money, I make money. If not, I'll just sit back and wait to do what I got to do. And like I said, if I got to put a short position on the S&P, the NASDAQ, or the Dow, I'll have no problem doing it. So
yeah. Like I mean, I haven't pulled too much on it. I'm like just basically like following my stocks, and if they tell me it's time to sell them, I'll sell them. But it's really it. we'll see what happens.
Exactly.
All right. I don't really have any questions. I know normally sometimes we have John or Bart or somebody else on this.
I have a question. Who's
Yep.
trash?
Who's beat? I almost don't even want to talk about that just yet. I kind of want to let it linger until.
No, it's got to be put out there.
Yeah.
So
Uh,
that's it.
yeah, that's pretty.
All right. And then next week you'll learn more about who we are.
Yep.
And why we're doing this. We'll start off with that. So this way you guys have an idea, because this is the first time we're doing this and we truly have no clue.
Yeah.
So is that
all right,
it?
awesome. Yeah, that's it.